Welcome to the Office of the Treasurer and Tax Collector's Overpaid Executive Tax video. This video will provide information on what the Overpaid Executive Tax is, how the tax works, who the tax is imposed on, and filing payment requirements. What is the Overpaid Executive Tax? Generally, it imposes an additional tax on taxable gross receipts from businesses in which the highest paid managerial employee within or outside of San Francisco earns more than 100 times the median compensation of employees based in San Francisco. For the purpose of this tax, highest paid managerial employee is defined as an individual with managerial responsibility in a business function within or outside of San Francisco who receive the most compensation for a tax year. The Overpaid Executive Tax was approved by San Francisco voters on November 3, 2020, and became effective as of January 1, 2022. What qualifies as compensation? Compensation includes wages, salaries, commissions, bonuses, property issued or transferred in exchange for the performance of services, as well as compensation for services to owners of pass-through entities, and any other form of remuneration paid to employees for services. Exemptions. Any small business exempt from the gross receipts tax is also generally exempt from the Overpaid Executive Tax. Additionally, the Overpaid Executive Tax does not apply to the following: certain nonprofit organizations and businesses exempt from local taxation, such as banks and insurance companies, and receipts that are excluded from gross receipts for purposes of the gross receipts tax. How is the overpaid executive tax rate calculated? The overpaid executive tax rates vary and are based on the compensation ratio of the highest paid worldwide managerial employee to the median employee based in San Francisco. The table here shows a breakdown of how the overpaid executive tax rate is calculated. The overpaid executive tax rate is calculated as follows: 0.1% if the executive pay ratio is greater than 100 to 1, but less than or equal to 200 to 1. 0.2% if the executive pay ratio is greater than 200 to 1, but less than or equal to 300 to 1, and so on. The highest tax rate is 0.6% if the executive pay ratio is greater than 600 to 1. Different rates will apply to administrative office tax. Calculating median San Francisco-based employee compensation. For the purpose of this tax, median is the middle value of the annualized full-time compensation. But if the business has part-time employees or employees that only work part of the year, then the median should be calculated after the compensation for those employees are converted to full-time equivalency and then converted to annualized full-time equivalency. To calculate full-time equivalency, a business will need to take the part-time employee's compensation for the tax year, multiply it by 40, and then divide it by the average number of hours the part-time employee worked per week during the tax year. To calculate the annualized full-time equivalency, a business will take the full-time equivalency, multiply it by 52, and then divide it by the number of weeks worked in the tax year. Please note that independent contractors should not be included in the annualized full-time compensation when determining the median San Francisco-based employee compensation. Over the next few slides, we will share some scenarios to help you understand how to calculate the overpaid executive tax. Scenario 1. ABC Inc. has 1,113 employees, of which 2 have managerial positions. John is the CEO and has a compensation of $8 million. Jacob is a CFO and has a compensation of $150,000. The compensation of the median San Francisco-based employee is $50,000, and the gross receipts attributable to San Francisco are $36,040,000. What is the overpaid executive tax? The answer to this scenario is as follows. ABC Inc. will first need to determine what the executive pay ratio is. To do this, ABC Inc. will need to take the highest paid managerial employee's compensation, $8 million, and divide it by the compensation for the median San Francisco-based employee, $50,000. The executive pay ratio is 160. From the tax rate table previously shared, if the executive pay ratio is more than 100 but less than or equal to 200, then the tax rate is 0.1%. To calculate the overpaid executive tax, ABC Inc. will take the gross receipts attributable to San Francisco and multiply it by 1%. In other words, $36,040,000 multiplied by 0.1% is $36,040. ABC Inc. will owe $36,040 for overpaid executive tax. Scenario 2. Morgan is the CFO of Museum of Recyclables, a nonprofit qualified under IRC Set 501c3. His annual compensation is $5 million. The compensation for the median San Francisco-based employee is $35,000, and gross receipts attributable to San Francisco are $6 million. What is the overpaid executive tax? The answer to this scenario is as follows. There is no tax owed because certain nonprofit organizations and businesses exempt from local taxation, such as banks and insurance companies, are exempt from the overpaid executive tax. Scenario 3. Cactus Logics Inc. has offices around the world and is headquartered in New York. Annabelle is the CEO of the corporation and is based in New York. She has a compensation of $10 million. The compensation for the median San Francisco-based employee is $47,000, and gross receipts attributable to San Francisco are $3,500,000. What is the overpaid executive tax? The answer to this scenario is as follows. Cactus Logics Inc. will first need to determine what the executive pay ratio is. To do this, it will need to take the highest paid managerial employee's compensation, $10 million, and divide it by the compensation for the median San Francisco-based employee, $47,000. The executive pay ratio is 212. From the tax rate table previously shared, if the executive pay ratio is more than 200 but less than or equal to 300, then the tax rate is 0.2%. To calculate the overpaid executive tax, Cactus Logics Inc. will take the gross receipts attributable to San Francisco and multiply it by 2%. In other words, $3,500,000 multiplied by 0.2% is $7,000. Cactus Logics Inc. will owe $7,000 for overpaid executive tax. For the final scenario here, we will show you how to calculate the part-time employee's compensation to annualize full-time equivalency compensation. As you may recall from the prior slides, to calculate the overpaid executive tax, a business will need the median San Francisco-based employee compensation. For businesses that have part-time employees, the median should be calculated after the compensation for those part-time employees have been converted to full-time equivalency and then converted to annualized full-time equivalency. Let's take a look at this scenario. Joe is a part-time employee at ABC Inc. Joe was paid $10,000 during the tax year and worked an average of 30 hours in a week. Joe only worked 25 weeks out of the year. What is Joe's full-time equivalency and annualized full-time equivalency compensation? To calculate the full-time equivalency, ABC Inc. will need to take the compensation for the tax year, which is $10,000, multiply it by 40, and then divide it by the average number of hours Joe worked per week during the tax year, which is 30. The full-time equivalency is 13,333. To calculate the annualized full-time equivalency, ABC Inc. will take the full-time equivalency we just calculated, 13,333, and multiply it by 52, which equals 693,333. This number should then be divided by the number of weeks Joe worked in a tax year, 25. The annualized full-time equivalency is 27,733. ABC Inc. should use this number to calculate the median San Francisco-based employee. The scenarios explained in the previous slides show how to manually calculate the overpaid executive tax. To estimate the impact of the overpaid executive tax, businesses may also use the overpaid executive tax calculator on our website. You may use this tool by inputting the compensation of the highest paid managerial employee, compensation of the median San Francisco-based employee, and gross receipts attributable to San Francisco. Once these numbers are inputted, click Submit. The estimated overpaid tax will be calculated under the Submit button. Please note that this tool is for estimation purposes only and is not a replacement for filing a return. Now that we've shared several scenarios to understand how the overpaid executive tax works, the question is, when do you need to file and pay? For most entities, filing and payment of the overpaid executive tax will begin in 2023. The filing and payment will be due annually by the last day of February for the year prior, along with the annual business tax return. Although there are no estimated quarterly payments due for the overpaid executive tax in 2022, beginning in 2023, estimated business tax payments are due April 30th, July 31st, and October 31st. Additionally, residential landlords with $2 million or less, adjusted for inflation, in San Francisco, gross receipts are exempt from estimated quarterly business tax payments and will not receive an estimated tax payment notice. And finally, proceeds from the overpaid executive tax will be deposited in San Francisco's general fund and may be expended for any governmental purposes. Thank you for watching the overpaid executive tax video. We hope this video helped you better understand the tax.